Welcome to Momentum Monday. Today is January 28th, 2024. Last week, we saw further strength into the stock market. The S&P 500 made another new all-time highs. And the good news here is that it's not just a few large cap tech stocks pulling all the weight. We are starting to see an expansion into more sectors, even the energy sector, which has been underperforming in the past few months. It bounced. I mean, it's still in no man's land here, oscillating around its 200-day moving average. So the index that we're really looking at is the Russell 2000, since it just represents 2,000 different companies. Gapped up on last Monday, and then it kind of went sideways. And then from Tuesday to Friday, the price action here was like playing a whack-a-mole. It would just gap up in the morning on strong economic news, and then it would sell off for the rest of the day and finish near the lows of its daily range. But either way, it managed to hold its its Monday gap. So now all eyes are on small caps to see if this rally can expand into small and mid caps. And if Russell 2000 IWM clears 198, 199 next week, we'll probably see a lot more action under the positive bullish action under the surface. And then if it loses 193, I'd say we might see just another leg lower. So obviously next week is an FOMC week. The Federal Reserve is going to decide on interest rates, and they're going to make comments on their future intentions. So as usual, this could bring a lot of extra volatility to the tape and potentially decide in which way the Russell 2000 is going to break. But even if there wasn't a Fed meeting next week, we are in the midst of earnings season. And granted, so far, earnings have been really strong, and market reactions to most earnings has been positive, and it's not just in one or two sectors. I mean, if you just go through the various earnings reports, you notice, so many different sectors are represented, like Procter and Gamble, gaps up on earnings, kind of holding the gap, and I'm trying to continue higher. Obviously, this is a lower beta name that is kind of slower mover, so I'm not that interested in it, but it's acting constructively. LVS, another positive earnings reaction last week. Verizon, which is a telecom, also gapped up on earnings and is just tightening up, looking to potentially continue higher. ASML, which they make semiconductor equipment, also gapped up after crushing earnings estimates and is holding its gap. And by the way, ASML biggest client is Taiwan Semiconductors, and Taiwan Semiconductor, they make over 90% of the advanced smart chips in the world. So basically, TSM and ASML are probably the two most important companies in the semiconductor field, and their results are really showing there's so much demand for anything related to AI, and this is why anything related really to AI has been going up and outperforming in general in the past few weeks and in the past year. Some other sectors where we saw strong earnings. IBM also gapped up, better than expected earnings. Now, also positive market reaction to earnings. Netflix, obviously in entertainment, big gap on earnings. They crushed estimates, follow through. What else? AOV, which they make auto parts, also positive earnings reaction. VLO, which is a refiner, also positive market reaction. So as you can see, so far, mostly we've been seeing positive market reaction to earnings, which is really bullish, because the market reaction to earnings is showing the actual market sentiments. And granted, we had a couple names like Tesla, which missed estimates, and it was already in a downtrend, missed estimate, gap down, and it's looking vulnerable, um, especially if it loses that 180 level where it bounced last week. I think it can drop all the way down to 160, 150. One of the weaker stocks. Intel gap down 10% on Friday, despite beating estimates. I mean, it had such a huge run in the past 3 months that it's normal just to have some back and forth action. So next week is huge for earnings. We have several of the big tech companies reporting, and I'm not sure they will. I mean, there's such widely followed companies. I'm not sure how much new information they're going to show to investors. Like we have Amazon and Meta and Google, Microsoft, AMD reporting earnings. And as you can see, most of them have been really going up in anticipation of strong earnings. So the market is already expecting them to really surprise on the positive side. And this is why if we really see a gap up in those names, I wouldn't be surprised if that gap up is faded, at least initially, just because that wouldn't be really a real surprise because the markets already has priced in, baked in really strong reports from those companies. But nevertheless, we're going to watch the market reactions. And when it comes to playing earnings, you don't really need to gamble by holding over earnings, obviously, unless you're really a long-term investor who understands the underlying trends, fundamental trends behind those companies. If you're a swing trader or if you're a position trader, there's really very little reason to gamble by holding over earnings. You can participate in a pre-earnings move ahead of earnings, as you can see here, when the market really expects a company to beat earnings estimates, market participants start to buy in anticipation of that earnings report. So we see those stocks breaking out 2 to 3 weeks ahead of their earnings reports. Much safer way to participate that way. Or you can wait for the market reaction to earnings, like we saw with Netflix last week. You see a positive market reaction, and then you can participate after that reaction in a potential continuation in the same direction of the earnings gap. These are much safer ways to participate, and you can find much better risk to reward entries that way than gambling over earnings. And I think that's all I have for this week. See you guys next week.